Hello, everyone. This is Josh Friend from Insellerate, CEO and founder. I'm thankful to the CMBA for letting us take over their Connect podcast today, and I was able to invite someone, actually a friend of mine, someone I have a lot of respect for. I've worked with in the past, and has had a long tenure in the mortgage industry. And where he's working now, I think it'd be really interested to hear him to talk about and for everyone to hear, and just kind of hear some background. So, Jon Irvine, welcome.
I appreciate the warm welcome, Josh. It had been a while since we'd seen each other, so I was glad to have run into you at the MBA a couple of weeks ago. Looking healthy, thin, fit, handsome, all the good stuff.
Well, I appreciate that. I try. No, yeah. So listen, there's a handful of reasons why I thought about speaking with you. One, from a mortgage side, operational side, experience side. You're someone that I know in this industry has had a lot of success. You've been part of a lot of successful mortgage companies running production. And then also, you're now part of Change Lending, which also has Change Mortgage, which I think is really, a great topic for us to talk about. And I wanted to kind of hear about what that's like and what you guys are doing at Change and what the mission there is, and what you're trying to do and who you're trying to serve.
Yeah, hey, I appreciate the opportunity to come on here. I've had the pleasure of joining the Change Company in June of this year. And, I like to tell people that this is probably a unicorn opportunity that I've had in my career, unlike anything else. And it was a pretty easy decision for me to decide to come to this organization. As you mentioned, Josh, I've had a pretty long history and career. I started off my career at First Franklin, running retail sales and marketing for, they were a pretty big non-prime player back in the day, probably a small or maybe a little bit bigger than small part of the crash. But, while we were there, we did something pretty innovative that I was very proud of in building a consumer direct purchase focused platform, which is a very, very difficult thing to do. And, it came with some blood, sweat, and tears, but we did it very successfully. Lending Tree was one of our largest partners. I think we were the #1 purchase platform on the Lending Tree platform for 4, 5, 6 years in a row. I sat on the advisory board for them. It was definitely a unique time and a unique business. But this is probably more unique than that. If you'll indulge me, I'd love to tell you a little bit about, Change and what we do. I'm the Chief Production Officer for the Change Company. And Change really has one mission in mind. Our mission is to empower all Americans to pursue their dreams by providing fair and equal access to financial services. And so what does that mean? Historically, there has been a gap in income and access to financial products for people of color versus their Caucasian counterparts. And the Change Company endeavors to really close the wealth gap for Black and brown people. Interestingly enough, there's been a ton of studies that have been done. We just participated in one through the Brookings Institute recently. But if you look at income inequality in the U.S. Since prior to the Civil Rights Movement, you actually seen the gap close somewhat, right? So Caucasians and their non-Caucasian counterparts, income disparities aren't as pronounced and profound as they were, back many years ago. However, interestingly enough, the wealth gap has actually widened. It's gotten bigger. And there's one primary reason for that: homeownership. when you look at home ownership rates for, specifically for Blacks and Hispanics, they haven't been as high as Caucasian. And so we endeavor to provide financing solutions for all Americans, including people of color, to try to close or bridge the gap in that wealth gap between whites and non-whites. So, when you look at it historically, I was looking at some charts and research before I jumped on this podcast. As recently as 2019, for Caucasian households, white households, had a total net worth of somewhere just south of $200,000, whereas their African American counterparts were somewhere in the neighborhood of $50,000, and that is directly correlated to home ownership. So, how can we help solve this gap? And that's where the story gets really interesting. So, back in 2007 and 2008, as I mentioned, I was working at First Franklin. I'm not going to let you off the hook either, Josh, because I know you worked at IndyMac and you guys were selling a lot of neg-am loans back then. So you were part of it too.
Then that's a problem. That prime lending shop that did the same thing. So,
That's right. I forgot you. Yeah, that's right. You and Steve had the subprime lending shop that you probably contribute a little more even than IndyMac did. So, the subsequent housing crisis bore new regulations for financial industries, probably most arduously for our industry, the mortgage industry, in the Dodd-Frank Act of 2008. Ironically enough, President Obama was the president at the time, and there was a recognition by the housing authorities and by President Obama at the time that these new regulations, while desperately needed for obvious reasons, to save the world from financial calamity and, stop the, cowboy nature of that had been prevalent in the industry, it was going to cut out about 5% of prime credit-worthy borrowers that otherwise should be entitled to be able to get a mortgage. With these new regulations, they now were not going to be able to get a mortgage. And so disproportionately, these people that were being cut out were people of color. And so President Obama, in his infinite wisdom at the time, recognized this fact and said, I'm going to take a very little known entity called a CDFI, Community Development Financial Institution, and I am going to make this entity, with certain caveats, exempt from certain portions of the new regulations that are being put in. So we can try to create, a financing avenue for this 5% that's been disproportionately adversely affected by these new regulations. And so they did just that. They created CDFIs. Now, CDFIs don't come without rules, restrictions. Basically, what they did was create an entity that had to have a community advisory board that was attached to the institution. And this group would be made up of people demographically that looked like the people that you're trying to serve. So in our case, we're approved as a CDFI for Hispanics and African Americans. And so we've created a community advisory board to help us develop products to address the needs of our community that are people that are very largely prominent in the African American and Hispanic communities, as you would imagine. And what this has enabled us to do, probably what's been most exciting for me in joining, is it's allowed us to create a very special product called the community mortgage, that this loan is exempt from ATR. It's exempt from the ability to repay rule. And so we're able to give loans to folks, prime creditworthy customers. Our average FICO is well north of 700. Our average LTV is somewhere in the mid 60s. We have excellent seasoning credit quality because we've been doing this now for a couple of years. But this loan there's no income required. There's no employment. We don't even take employment on a 1003. We effectively are able to qualify a customer with three simple things. Number one, the appraisal. Number two, their credit report. And number three, reserves. And it can be as little as 3 months reserves depending on the program. It goes up to 80% LTV, up to $3 million, and FICO scores as low as 640. And so that's allowed us to help customers that are gig workers, self-employed, retired, may have had a medical event. And even when you talk about, gig workers, disproportionately, a lot of these folks, if you think about it, Uber drivers, DoorDash delivery folks, gardeners, these are, a lot of them are people of color. And so our loans, solve for a very specific issue, and we are trying to be a part of a solution, if you will. That was a monologue. I apologize.
No, that was great. I honestly, Jon, I didn't realize that you guys had created your own product as well. That's that's really impressive. So that's kind of the main way. So I guess the give me the
CDFI.
Yeah. So that's
CDFI.
All right. So that allows you to have licensing as well, or that's where you lend from. Is that an overall banking platform, or is it just a lending platform, or how does that work?
So CDFI, the CDFI itself, it's not a bank. As a matter of fact, the genesis or the basis platform of this company in order to launch it was Commerce Mortgage, which you may be familiar with. And so in 2018, the founders of the company, including Steve Sugarman, who is our founder and CEO of the Holdco, the Change Company, Jeff Siebold. Jeff and Steve were the former founders of Bank of California, where I used to run distributed retail. And that they're really my tie to the company, in addition to Ted Ray, who's the president of the mortgage platform here, and Ted was the president of Bank Home Loans at Bank of California. And so that's really, part of what brought me back here. So Steve and Jeff and Ted went out and purchased Commerce Mortgage as the baseline mortgage company. Now, interestingly enough, and we're currently licensed in 42 states. We'll be licensed in 48 by the end of the year. The only two states that we're avoiding thus far are New York and Massachusetts, just because they're so arduous. But in addition to just being an IMB, as a part of the CDFI designation, we actually have membership in the FHLB, in the Federal Home Loan Bank. And so, ostensibly, there are perks and advantages that a CDFI is able to enjoy that go beyond just an IMB. We have access to the CDFI fund, where they can help with capitalization in certain places. We have the opportunity at some point to be a part of the FHLB and be able to borrow just as banks borrow from them. So to answer the question, no, we're not a depository. And, in a lot of aspects, we are an IMB, but then there are some additional, perks, I guess, to being a CDFI. Now, we specifically are a CDFI for Hispanics and African Americans, as I previously mentioned, and we recertify for that every year. And there are a number of conditions that constitute the recertification. So it's a very prescriptive and specific set of rules and requirements that we operate within in order to make sure that we're fulfilling our mission and able to continue our CDFI designation.
No, I think that's great. I mean, obviously having access to the Federal Home Loan Bank and have that liquidity for a lender is huge. Right?
Yeah.
So that's a great pickup. What kind of with your overall strategy, how are you guys? Are you educated in the market? Because like obviously I'm in this industry and I didn't realize about this rule. There was some caveats for the ATR and all that kind of stuff. I wasn't. I didn't know that. So are you out there? So I can only imagine, especially these underserved communities, there's less education about the financial side of it, right? So are you out? Are we doing education? Are we working with the community? Is there any type of outreach within the community itself?
All and everything and more. And yes, I feel like 90% of my life is educating people on what a CDFI is, what our mission is, why there's value there, why this is important. I mean, look, we live in a very highly political charged environment right now. There's social dynamics that are probably as tense now that that we haven't seen since the 1960s in this country. And being part of something that potentially is a solution for that to help sort of calm the temperature of this nation feels good. And I tell my employees all the time, most of the time, if you want to do something altruistic, do something good with work, you've got to go work for a nonprofit. It's very rare that you have the opportunity to do good for the community, but also be at a for-profit business and be able to make money and be very profitable. And so, those two things combined with the unique product set that we have, we're in a super commoditized business. We have a non-commoditized product, and we have a saying internally, do good by doing good. We have the opportunity to do good by doing good. Why would I not work here? And now I get to do it with people that I love. I literally am the happiest that I've ever been in my entire career. But to go back and answer your original question, I would tell you that we educate borrowers we educate our own internal staff. We've got a very large distributed retail network, and we literally host multiple times a week seminars internally for our own employees to educate them on the benefits of our programs, the why of what we do. We, at every turn are educating our internal employees on what our mission is and why they're a part of something important. Then we've got a wholesale channel where we spend an inordinate amount of time and energy going out to our broker partners and educating them on what we can do and why this is important and how it can help grow their business. But we're also going even further than that. At the holdco level, we're out there educating Wall Street, counterparties, regulators. We're out there educating rating agencies. One of the things that I'm most proud of is that our loan performance has been absolutely stellar. And we've got a number of very high profile and well-known Wall Street buyers of our product. And, initially it wasn't like people were rushing to the door to come buy. People were afraid. They thought, wait a second, you're doing a loan that doesn't meet ATR? That scares me. It sounds like it's subprime. It sounds like, we're hearkening back to these days when these regulations came in. But now that we've had, a couple of years of originating the product, you're looking at the stellar performance that we've had. People are getting more and more comfortable. And then when you add in the fact that we're doing something that's considered, an ESG type investment, people are rallying. Part and parcel for that whole conversation. We just a few months back closed a deal with Netflix, where Netflix invested, a nice sum of money with us to support African American home ownership. And if you go on our website, the Change company's website, changellc.com, you'll see a lot of the parties that want to be a part of what it is that we're doing, and it's exciting. It's really exciting.
Yeah, no, it sounds like that's, when I had the opportunity to invite a guest, that's why I wanted to bring you on. It's definitely exciting because a couple of things that you mentioned. First, back to the do good by doing good. I like that. Is you're creating generational change, right? And I think that's what people don't understand. People of color, minorities, and poverty, people that don't have, you can have generational change by getting them into home ownership, because then they have retirement, and then their kids tend to go to college, and then that's a complete generational change, right?
You're absolutely right, Josh.
They're no longer education. They're getting educated, and everything's just like the rest of society. Then that's the equality I think we're all looking for, right? So I think it's good that we help in areas that we've obviously underserved and create inequality for a long time. So I think it's really exciting. And then you mentioned, I'm just going to say this because the subprime or whatever that, the truth is we had those loans for a long time performing really well. We had this little like blip of 2 or 3 years of like hypermania, neg am loans, and then credit default swaps, and traded over and over and over again. So I always said, listen, if you really look at the market, there was great performing non-agency products for a long time, since like the 70s. I mean, it's been around. So I'm glad to see it come back. Obviously, this is a unique way for it to come back, but it's good. I think it does serve the community, because you're right. If I am a gig worker economy, if I am someone who is in let's say I'm in a neighborhood where there's more poverty, and I'm working hard, and I'm doing jobs, and I have money, and I should be able to go buy a home, this is a way to help those people go take advantage of that. I think that's really unique.
Yeah, there's you of all people. That it's interesting because our founder and CEO Steve, he was our customer, our target customer, in that he's self-employed, plenty of money, and he couldn't get a loan. I mean, you've worked so hard, Josh. I've seen you, go from a mortgage professional and executive to now you're the founder and CEO of one of the top CRM systems in the country, and certainly in our industry. It's probably number 2 to Velocify, and probably closing quickly. And you probably have a hard time getting a loan because I'm sure if you, like other self-employed people, you try to, write off as much as you can, as you should.
Yeah, no, I was hearing what you're saying. I'm like, oh, interesting. That's those are up to 3 million. Huh, interesting. I didn't know those programs were still out there in the marketplace. But you're right. Access, it is trying to get access to capital, and I think that I don't know, and I think a lot of Americans, and I'll just say this because I, as a child, I grew up in poverty, so I had some really difficult childhood. I understand what it's like to not have access to capital and have resources, but most of Americans, they don't understand that's a reality, and how much of a difference. I mean, even $1,000 that someone could go borrow from their parents to fix the car is massive, and people don't understand how massive that is. So there's access to capital, and to bring up the equality in America, I think is an amazing thing for you guys to be doing. I obviously, Jon, have a ton of respect for you, and you mentioned at the beginning, and I'm just going to ask you this question: how many loans a month would you guys close in the purchase call center, approximately back in the day? Do you remember?
Yeah, so I would tell you, I'm gonna try to reverse engineer the math because I don't remember the numbers exactly off the top of my head, but we were closing somewhere in the neighborhood of, I'll call it 150 million a month in the call center, and it was a unique animal. It is a different business model. I'm going to take off my change hat for a second, and I'm going to put on my consumer direct purchase money hat. I'm going to start by saying that I don't think I'm smarter than anybody else. As a matter of fact, I know from knowing you, you're a lot smarter than I am. I think it was a nice combination of opportunity, timing, and product that helped catapult us to where we were. Now, having said that, and having done what we did, it took a tremendous amount of strategy and commitment to the strategy, financial investment, and patience. And that is one thing that we lack terribly in this business.
Patience, right?
Patience.
Yeah,
Yes.
100%. Yeah, oh yeah.
And then it requires a certain amount of education, if you will, in the marketplace. So I'm going to tell you what I feel like are the keys. And I'm shocked that nobody really has tackled and solved for this in any meaningful way at scale in the consumer direct world. Because to me, since that day, it really feels like one of the biggest opportunities, missed opportunities in the marketplace. If a consumer direct platform could figure out how to solve for the purchase money market, they are absolutely going to change the industry, and they probably will become one of the largest companies in the industry, if not the largest.
I agree with you on that, John, 100%.
Yeah. So, when you think about, just changing buying habits, right? And I joke with people all the time. I've got a 28-year-old daughter, Jade, and I have a 20-year-old daughter, Julia. If Jade and Julia, when they go to buy a house, trust me, they're nowhere near being able to buy a house right now. They still both ask me for money all the time. Julia more than Jade. But when they go to buy a house, if they have to go in to see somebody face to face, they're not buying a house, period. That's it. If they can't text them, if they can't transact everything from their phone, they are not going to do it, period. That's just not part of their nature. They don't even like to make telephone calls. They say, why talk when you can text?
They don't want, yeah, it's like, have you thought about calling the company and asking them the questions? Well, I emailed them. There's no one to text. I'm like, well, pick up the phone. You're absolutely right. That's the reality of it.
It's the reality. And so with that, if you need to get a loan, they're not going to go to your local mortgage broker. They're not going to go sit down with your local mortgage loan officer. They will only do it with some place that they can electronically transact with. Now, I'm not saying that distributed retail platforms or brokers can't do that. They can, but smaller scale, it's tougher for smaller scale operations to invest in the technology to be able to efficiently facilitate this. And so a consumer direct platform is the perfect platform from a technology, from an efficiency standpoint, to be able to facilitate that. Now, why haven't they done it? There's one big reason, in my opinion, that they haven't done it. Realtors. And I love realtors. The realtors are the backbone of my retail platform. But realtors are aging. I think there was an MBA study out a few years ago that said the average age of a realtor at that point was 54 years old, where now it's probably even older than that. And so realtors have long been the big barrier to call centers. They historically will counsel their clients against it and want them to go to the local in-house broker for a variety of reasons, but control's probably the biggest one of them. They want somebody that's there, that they can see what's happening, they can understand, they've got visibility into the transaction, because when you think about it, their money's at risk, right? It's their commission. However, even buying habits are changing. What do most people do when they go to buy a house now? They go to Redfin, they go to Zillow, they go to Realtor.com. They're not going to their local realtor. They finally will get a realtor because they need somebody to be able to facilitate the paperwork because it feels daunting to them. But they're transacting most of the buy process online as it is. And so less and less, I think you're going to have that same, resistance from the realtor community because they're moving toward the technology. So then what is it that you need? You need patience, because if you think about buy cycles, a refinance is great because it happens really fast. You don't have to wait for the money. You're 30 days if you're in an efficient shop and, from application to close. Purchases don't happen like that. You've got to go out and get pre-qualified for a loan. You've got to go look for a house. When you do find a house, especially in today's market, you've got to make offers on the house. A lot of times offers are getting 2, 3, 4, 5, 10, 100 different bids on them. So it's difficult to actually get the property. Once you actually get the property, you've got to go into contract. And then if you have a house yourself that you've got to sell, now you're contingent. I mean, that contract time can be anywhere from 30 to call it 90 days. You know, you've got a 6-month cycle window in there between the time that you take an application and that loan actually closes. And mortgage companies just have not shown the patience to be able to live through a 6-month cycle. And if you actually invested in it, invested in the technology to facilitate it, built yourself a realtor community or network that you could plug your customers into, like I said, I think you would change the game. And you know, it's there for the taking. Maybe you should ditch Insellerate and go build a purchase platform, Josh.
Well, listen, if I was not running Insellerate, I would use Insellerate, and I would go after it. There's no question. That's exactly the market I would go after. Because you are right. Everything's moving in the right headwinds to this actually becoming a reality. The consumer themselves. I mean, after COVID, everyone wants to order something, a few pushes on the phone, and they want it. They expect that. So the technology, Fannie Freddie coming up with day one certainty, with all these new rules that are actually allowing for verification deposits, soon you'll be able to get that loan without doing anything. You go online, you put little bits of information in there, and we pull all your information for you, and here's your loan. Tomorrow you can sign for it. Then the whole game changes. And then all of a sudden purchases, and you're right, I'm out shopping for a home. What am I doing? I'm on Zillow or Redfin, and guess what? I'm getting advertised mortgages the entire time. So that transaction of it's Saturday, I'm going to buy this house. Oh, it's more than I originally was approved for. Can I get a higher bounce? Let me call my loan officer. Oh, they're not available. That's all right. Let me just hit this button over here. Now I got the same loan and I'm approved. That is going to change. So obviously, call centers are a great place to grab that. And listen, for those that have listened or listened to this, the experience, and I watched what you guys did at Nation Point. I have actually used some of the techniques I learned from you and other call centers for purchases, and it is effective, and it does take time and money. I don't think anyone's ever executed as well as you guys have. So just whoever's listening, it is something very interesting you can get into. It's very powerful. But what I'm really just want to kind of wrap up and say thanks you for coming on, and I'm really excited what you guys are doing at Change. I'd love to see how Insellerate we could help you guys with anything we can do. And so we definitely like to help. We want to help serve the underserved community as well. And I really appreciate Jon. The kind of the friendship and a lot of the expertise over the years I've learned from you. So thank you for coming on here, and the CMBA. Thanks for letting us have us do this.
Yeah. Hey, Josh. Thanks for having me. I do want to tell you before I leave, I think we've got a massive consumer play coming up. I didn't get a chance to touch on it too much. It's called ChangeFi, and that's our consumer direct platform. It will quickly become the largest component of the organization as we grow. So, I'd love to talk to you. Insellerate is incredible technology. I remember you coming in to show it to me at the bank. I'm sure it's leaps and bounds even from back then. And I know quite a few folks in the industry that's on the platform, and I applaud your success. It's been really fun to watch, and I get really excited to tell people, yeah, I know Josh Friend. I love that guy because I knew him way back when before he was this CEO giant at Insellerate. But I'm proud of you too, and I appreciate the opportunity to come on here and talk to you.
Thanks, Jon. All right, thanks you, everyone.